Hey everyone, this is Charles Sniper. Welcome to this overview session of stocks technical analysis. This is part of Eagle Investors education training programs. A lot of members have been actively requesting for these programs, education programs, and also expressing interest in learning technical analysis of various stocks, futures. This will help them in trading futures or commodities or any trading instrument for that matter. So in this session, we'll be going through at a very high level uh, what should be the main goals of trading for an investor, and what is technical analysis, and what how technical analysis will help answering a lot of questions that the members typically ask in the forums. These training programs enable them to kind of train themselves and enable them to find support resistances, the setups, proper setups by themselves. Also, we will be looking at a pre-fabricated set of training sessions that you can go through. We'll go through those training sessions and what is covered in each session and what is the difference between all those stocks training sessions that are made available. And we'll also discuss the training options that will be there. And if time permits, we'll go through some technical analysis of some stocks live. Okay, let's jump into this session. So, what should be the typical trading goals of a trader? The primary goal is to make money, not lose it. That's very important because a lot of people focus on making money, but they do not understand how to not lose it, or how to kind of come out of a losing trade quickly. A lot of other typical trading mistakes that they do. S- So the main goal should be not losing it, and automatically people start making money when they learn how to not lose it in trading. So a lot of people trade in different style. Some people invest in mutual funds, index funds, or bonds, especially people who are investing through 401k. They have some funds that are available, so they will go through that. Some people actively take things in control and trade stocks by themselves. So the trading is a very good platform, the trading systems and all, because a lot of money is being exchanged and a lot of money is being pumped into this. So if you want to make some money or lose money for that matter, this is a very good instrument, and this is a very good skill that a lot of people should try to excel at. Like any other skill, we should always try to understand the basics of it, read into it, and then only enter into the practicals. But it's the other way. A lot of people just right away jump into trading without knowing a lot of concepts of technical analysis or other fundamental analysis that will help them to make the right decisions. So if you have been trading from a long time, one important questions that you need to ask is, have you been outperforming the S&P indices or underperforming it? So typically the market has a very good risk reward ratio. If you invest in the market as whole, it always tends to go up rather than actively day trading, dancing in and dancing out of this position. If you buy the market over a longer period of time, it makes consistent profits. A lot of hedge fund managers try to beat the performance of S&P, and for some reason or the other, a majority of them lose. They can't match the performance of the S&P index. So you have to clearly have an idea on what type of trader you are, and have you been successful in beating the market S&P index in terms of annual returns, or have you been consistently losing it? So if you have not been beating market from the performance wise, you have to really understand, is it really worth spending any more time in trading? So you can simply turn into a lazy portfolio of buying index funds and keep adding money over every month or every quarter, a little bit money into the index fund and wait it out. You'll save all the time and energy trading, figuring it out, looking at the charts and all the roller coaster rides that you have to go through. So if S&P is returning 10 to 20%, if you are losing money, then something is seriously wrong. A couple of options there. Either you have to kind of improve your skills uh, to make money, or you should stop trading and depend on index funds because you can save a lot of time with that. So this is some self-analysis that a trader has to go through to determine where they are and whether they really need training or not, whether they need to learn technical analysis or not. So this is a kind of a process that will help them make a decision. So do you have all the expertise and tools at your disposal for beating the market is the question to ask. So now, typically, when we start analyzing stocks, there is a fundamental version of it, fundamental concepts, fundamental analysis, and there is a technical analysis of it. So fundamental analysis, say, for example, if you look at Apple, a lot of companies go and research in the market what is the demand, what is the supply for this phone, what is demand for this new product, how many people are buying it. They do all this analysis, fundamental analysis for Apple. Now, if you want to do similar kind of fundamental analysis for a different stock, they have to go through all this process again. But technical analysis is not like that. Technical analysis is independent of what instrument is behind the chart, whether it could be Apple, whether it could be a currency or commodity, or even for that matter, even if you are investing and maintaining a trading log, you can track your profits and losses as of each time and put it in a chart. So even your own portfolio, for that matter, also respects some of the psychological concepts of technical analysis. So learning technical analysis is essential, and it's like going through some basic theoretical concepts before you even write the exam. So a lot of people jump directly in trading, and they have money. They like the adrenaline rush of trading in and making some money and losing also. They like the roller coaster ride, but they do not understand that they are playing this game blindfolded without a proper understanding of technical analysis of the stocks. So technical analysis helps understand the supply, demand, and people's sentiments behind a stock and a price action that is happening in the stock. So it takes the guesswork and hope out of the equation. You don't buy a stock with the hope that it goes up, right? You have to have a uh, some measurable, tangible, historical performance. Otherwise, you can be knocked off from whatever direction the big money managers wants to take your money. Okay, so these are just at a high level why technical analysis is important. So how technical analysis help? For example, if what are the different market phases a stock typically goes through, like accumulation, distribution, or some people say market is consolidating, some people say market is bullish and bearish. So some of the concepts are very important to understand. Just looking at a market at a very high level market means you can take S&P 500 or Nasdaq or these major indices which cover most of the stocks that are being traded. So when you look at the chart, you can tell accumulation, where accumulation is happening, where distribution is happening. So that is something that will help you analyze the phase of the market. And the chart also helps capture the psychology of traders and the behavior. Like, for example, here when you see this top, there were a lot of people who got in here, and then there were a lot of people who got in here for a breakout. So there is a lot of people invested at these levels. So it's a combined crowd behavior here. So when the price falls this much, there is a very good chance that and it starts reversing. There is a very good chance that people typically during this down move would have lost faith in this stock. They would have come out, bottomed, and the reversal happens, right? So at each major level of this, there are a lot of crowd behavior that this chart captures. So understanding this crowd behavior like chart patterns and Elliott wave theory will be very helpful to know the big picture of what's happening with the stock and which stocks to buy. How can you know which stocks to buy and which stocks to avoid? So some good understanding of the relative performance of stocks in an index, the beta of a certain stocks. These will help you identify, say, in a semiconductor sector, what is some good stock to buy. So knowing how to kind of measure the relative performance will help in that aspect. How can you determine this change in supply and demand? If you see a lot of candlestick pattern here, so each candlestick pattern captures the buyers and sellers interest during that period of time. So it helps a lot to be aware of the changes happening in the candlestick patterns, and so that you can understand the changes happening in the supply and demand for a specific stock. You if you want to know if the stock is really in uptrend or it's in a downtrend, what is the major trend, long-term trend, and what is kind of short-term trend. So moving averages will help you identify the trend of a stock, whether it's an upward or downward. See, the stock is very extended. So, for example, if the stock starts to go above these two levels here, is it extended or where exactly it will end up? What is the target price? So all that information will be captured, or at least some standard deviations calculations will be in Bollinger Bands. So that is something that will help us identify the price targets. Some other questions that one should ask is whether I should whether we should ride, because most of the market is manipulated by the big players. For example, if you go and buy an ounce of gold, it's not going to fluctuate the price of gold that much. What fluctuates it is the big fund managers and money managers who are creating a wave of buying in the gold. So that big wave is something that lasts from a month to couple of months. That is the wave that a lot of swing traders will try to kind of capture and ride the wave. A lot of day traders focus more on the small waves that come at the beach. And if you are so engrossed in that small waves and looking only at the small waves, you might miss riding the big wave. So it's very important to understand how to ride the big wave and also how to ride the small waves under it. So multi-time frame analysis, looking at the chart for multiple time frames will help in that matter. And how are big players positioned in a stock? Some technical studies will help analyzing the volume analysis and when a big drop happens, if the stock is bouncing back, to what levels it might bounce. So Fibonacci retracements will help with that. And then after reaching all-time high, what level it goes to, extensions will help. And when you see certain chart pattern, and if the pattern breaks out or it gets busted, what are the statistical price targets? Typically, how much percentage it moves. So understanding that concepts will certainly help you exit at the right time. So what are support and resistance levels? So pivot point, moving averages, and VWAP, all these studies will help. So what's happening here is I'm asking a question that typically a lot of traders will ask. and I'm listing out a list of technical indicators, studies, or analysis that will help answer that question. So, what is about the momentum? Whether there is any momentum in the stock? Is a big move about to come? So, some indicators there will help with identifying that, and how much a stock typically moves, and what are the different supply and demand zones at a specific price, relative performance, and understanding different market sectors, and how overall market impacts my stock. If, for example, if you are in tech stock and there is a big selling happening in the tech ETF QQQ, even though there is no bad news for specific stock, all the heavy weighted stocks in that QQQ technical sector will get dumped. So looking at these market internals, market sectors, and high level market internal trim, all these kind of internals that we'll discuss will help you understand what's the health of the overall market at a specific time, and some questions on how to screen for a good stocks based on some technical studies and scanners and volumes. So all these kind of things, lot of different questions. There are so many indicators and studies which, when you understand perfectly, those will help form the foundation for making money in trading. So now you might ask whether we need all these things, right? So the right question to ask is for the kind of trading that I'm doing. I can be a swing trader who plays some trades for trade 1 month to 3 months. I can be a day trader who just kind of scalps for the day, and I can be a very long-term investor in stocks. So all these different kinds of traders might need different levels of technical analysis information. So to cater to different types of traders, we are proud to bring you a structured courses, a list of courses which go from basic level to advanced level. And now we'll go through such overview of the sessions that are offered. So we're looking at four sessions. The first one is the basic technical analysis. So this would be an essential one for almost all the traders. Even if you are a seasonal trader, by attending this course and learning the concepts discussed in it, you will have something to take home or something to learn from this session. And then the next session is the chart patterns and drawings. So this session is very specific to the stock. For example, if you are trading Apple and you want to understand if there are any chart patterns in that stock chart, or if you want to draw some trend lines or some resistances and supports, whatever you are doing is very specific to that stock. You can't whatever the drawings that you make, you can't export it to a different stock. So these are some techniques to find supports resistances specific to a task, and some very good trading platforms, the technical analysis platforms will support storing your drawings along with the stock chart, so that you don't need to kind of draw it again and again. But these are something that are not across the stocks. Okay. So you'll be learning a lot of chart patterns and drawings. We'll look into the details of what is covered in this session. A third one is technical studies and indicators. So this one is not stock specific. So this actually um, something that you can apply a study of volume profile or study of MACD, and you can change the stock from one stock to other in the ticker symbol, and the chart and these technical indicators adjust automatically to display the values for that stock that is currently in the display. So there is a difference between stock specific technical details, chart patterns and drawing, and stock generic technical studies and indicators that you would like to learn. And then advanced concepts and screening, this is more for a very big players who would like to understand the market as such in whole and would like to kind of find the best stocks in a sector. What are the different screeners that they use? Most of the screeners are based on technical studies and chart patterns and drawings that are covered in S2 and S3. So let's go and look at each of these sessions in detail. So the first one that we're looking at is basics. So what are the different chart types? What are the price types? And what time frame should I use? I get this question frequently. I'm a day trader. What time frames do you typically use? And how to identify if a stock is an accumulation or distribution pattern, and understanding the Elliott wave concepts to understand if there is going to be a correction wave or not. Understanding the candlestick patterns to identify supply and demand and some behaviors. So you might have seen people talking about doji candle or morning star candles. So we'll cover all those things in this session, and moving averages and crossovers, how these can act as entry and exit triggers, Bollinger Bands, whether stock is really overbought or not, and how we could look at a chart from multiple time frames, some gap analysis that we could do when there is a gap. What are the different types of gaps that typically are? Volume analysis and common mistakes and best practices. So just knowing this, attending this course and understanding these concepts itself will boost the accuracy of your trades, the profit potential of your trades by multiple fold. And this itself should be sufficient for basic foundation for the stocks training. So now, when we look at chart patterns and drawings, this course mainly understands what are the various drawing tools supported by most of the technical analysis platforms, and what are the potential reversal and support zones that can be identified using these various tools. It also helps in establishing a bond with the stock. For example, you might have seen when someone requests, can you please post the chart of a specific stock? If I have been analyzing that stock for a long time, I would have all the drawings at a monthly level, at a weekly level, some major levels where a lot of crowd behavior and traders were trapped. So all these kind of drawings, it helps building a bond with the stock by analyzing it over a period of time. So that helps you identify the memory levels of the stock when it tries to retest some of those levels. So all these chart patterns and drawings will help analyze that. Predicting the price targets, calculating the price targets when to exit. So you can, once you see a pattern, that pattern kind of breaks out. You know from statistical analysis when you undergo this training, from statistical analysis where exactly it could stop, um, what levels are will be the resistance based on that chart pattern breakout. So the next one is technical studies. So these are the studies that will help you evaluate the volume analysis, finding the momentum in the stock. For example, when you see me post a trade, I don't just enter a trade for the sake of entering. I go through most of these technical studies and indicators which scream to me that this is the right time to enter a specific stock. So understanding all these studies in depth will help you making right decisions on their entries and exits. It saves a lot of stress by avoiding stocks that do not have some strength or momentum associated with it. So these technical studies will help in all that matter. So advanced concepts, as I mentioned, understanding the marketing internals, market sectors, and calculating the relative strength, finding the best sector, best stocks in a specific index. What are the How can you use all the indicators that you learned in S3 to come up with automatic alerts when certain steady triggers a breakout or something like that? Steady based scanners and how you could save scanners as watch list. How, if you have stocks, typically, how are you going to hedge those stocks? What is the right way of hedging it with using options and stuff? Because this is a stocks technical analysis overview session, I'll not be explaining much in options related stuff, but that's what you're looking at. So this is a very structured program, and you got all the names of indicators here, and you got all the drawings and stuff. All this stuff is available on internet also. But what are the difference that you're talking about here is the expertise of traders. I have been trading for almost 10 years now, and I have spent thousands of hours and sleepless nights looking at the charts of the hours and also looking live during trading hours how the stock is moving. So my system of trading, my brain circuit is trained to look at all these identifiers and studies and identify specific patterns and the levels and what to observe in each study, how to use the study, so for that matter. So all those things might not be available online. So it's more to do with the experience, adding the experience behind these indicators and how to exactly use these indicators, when to enter what, when to exit. All these kind of things are explained in detail for each of these indicators, and also drawing tools and market internals. So most of these trainings, if you yeah, will cover all the topics required, all the topics mentioned, and more during the training sessions. So now, what are the different options that are available for these trainings? So if you have some questions, or if you'd like to kind of go with a private appointment with an expert of interest, then certainly we'll be enabling like 1 hour or 2 hour training sessions to go through you in person, try to understand the way you trade, and try to give suggestions, and try to kind of teach some of these concepts that you are interested in, especially your pain points and resolving or suggesting that. So these private tutoring sessions will be very customized to the way you trade, the questions you have, your portfolio size, your risk appetite. All these things will help kind of like an expert guidance, looking at the way you are doing and how you could improve. Or they can be also used to kind of go through these trainings and understanding these indicators, understanding the way I trade, the way other moderators trade. So yeah, this is one of the options where you could leverage and understand from the experience of all these moderators, the private appointments and private tutoring. If you are, the other option is the on-demand recorded session. So the discussed training sessions that I have shown, like S1, S2, S3, S4, all those training sessions, the topics in each training session is by themselves humongous. It takes humongous amount of time to understand those things. And if you ask me, at least 3 hours is a minimum, and 3 hours, more than 3 hours typically, is the time it takes to understand each session. So, but that will be a very good investment to make, certainly, to understand them in depth from an experienced traders, and kind of get cheat sheets for each of these studies. So that will be very helpful. Trying to understand, say, 10 years of experience of a trader as part of these trainings in 3 hours. That's a gift actually. So these trainings are published Udemy courses. You can enroll in them. Most of the trainings are very cheap. That's why in the first slide there was like comprehensive, in-depth, affordable training sessions. But it will help you trading in your entire career, whether you're just trading stocks or options or like day trading, swing trading. It doesn't matter. Understanding these foundational elements from the best of trainers will certainly help you build your trading brain circuit. Yeah, everybody has to come up with their own system. So for these Udemy courses and enrollment, exclusive discount coupons will be available for Eagle Investors members. So that's at a very high level, the course overview. So we are looking at, in the technical analysis, we are looking at a structured way from basics to people who are very enthusiastic about drawing some charts, patterns, identifying them, and calculating some levels and supports for them. The chart patterns and drawings will be helpful. This is foundation. Technical analysis basics is the foundation. Um, and then if you want to understand momentum and try to find the best setups, and want to go through all these indicators in depth, so this session will be helpful for them. And advanced concepts is for people who have a big portfolio and they would like to make the right decisions slowly, but they want to make the right decisions at the right time. So this will help them. And for all the other traders, once you learn the studies and indicators, how to use them, how to automate things. So all these scanners will help understand that. Well, thank you very much for your interest in learning through this technical analysis. So looking forward to kind of you looking forward to for you to take advantage of these education programs provided by Eagle Investors, and looking forward to see you as a better trader with strong foundations. The more people learn these things and form a community, the more beneficial that community would be. Um, a single person can't find all the right setups. It's very difficult to have those many eyes on different things happening. The big money managers employ a lot of different people, pay thousands of dollars. They build systems to monitor things, and we are at a clear disadvantage if we are trading in silo. So always a very good trading group, trading community with very strong foundations of technical analysis will go a far way in making every one of them a better trader and also forming a good strong community where things get shared and everyone can leverage the sharings and trying to make some very good profits for them and for the others too. Thank you. Appreciate that you like this overview session. Looking forward for you to um, enjoy this, enroll in these, and take good advantage of these discounted offers. Thank you. Bye.